Hello and welcome. You tune in to Market Fatafat with me, Ankita Saxena, and with me is Sharad Dubey. In the next 1 hour, we'll get you the top buzzers in trade and why they are buzzing on the back of news flow or on the back of technical charts. All of that and more. But before that, we'll take a quick stock of how the market is shaping up at this juncture. Sharad, we have picked up pace. We are hovering around the day's highest point right now. In fact, there was one point where we were almost going to touch the 25,000 actually. Yeah. We have moderated from that, but nonetheless we are hovering around the day's highs. We have picked up from the day's lows.
Well, the strength is there in the markets, yeah. Ankita, and as you rightly pointed out, we did touch the 25,000 mark in the day's trade. Be it Nifty Bank, and even the small cap indices, all of them have been firing cylinders, and this is interesting, the second straight day of a good up move coming in. Nifty Bank also holding the gains, roughly 124 points up. Nifty, you see, that's hovering around that 25,000 mark. A great support coming from Reliance after the telecom news flow coming in, where they'll be going after higher data packs as well from Jio. But overall, the mid section, as we call it, the small cap and the mid cap section also doing well. Auto sector has been the leader of the pack with a strong announcements coming in as China has improved the restrictions coming on the rare earth magnets as well. Apart from that, news flow specific, the textile segment, fertilizer segment also buzzing in the trade. So all cylinders are firing. The short covering status is there for Nifty and Nifty Bank. And joining us for this action-packed show, we are having Osho Krishan, and from our research team, Kanishka is joining us from Mumbai studio. So all four of us are here, and we'll be actually tackling most of the stocks in the day's trade. Starting with Osho, how's the market levels actually currently looking like? Would we see some more buying happening as sustaining our key levels both for Nifty and Nifty Bank?
Very good afternoon, Sharad. Firstly, thank you for inviting me at the show. Well, yes, no doubt we have seen a very strong turnaround in the sentiments because from the yesterday trading session that the runaway gap that we have seen in the benchmark indices. So I expect that the momentum should continue in the coming period, and on the higher end, I'm expecting a target of nearly 25,250 on Nifty, but on a positional perspective, for a short-term or intraday perspective, 25,020, which is yesterday's high, is still intact, a kind of a resistance for intraday. So one should look for opportunities on the dips because overall the market sentiments are on a bullish front. So I expect that any kind of dip towards the zone of 24,950, 940 on the spot levels can provide some kind of positive momentum in Nifty. On the higher end for the day, 25,020, 25,030 will be the immediate target zone on the higher end. But on the positional view, I am expecting 25,250 in Nifty. While for Bank Nifty, again, it is at a very strong resistance zone, the 56,000 mark. So any sustainable move beyond 56,000 can only provide very strong momentum in Bank Nifty. So I expect that one should either look for opportunities on dips towards the zone of 55, 700, 750 kind of a zone on spot levels to buy a Bank Nifty, or wait for 56,000 to get a sustained breakthrough and then only look for buying opportunities in the banking space.
All right, so that's the levels to watch out for. But let's get going with all the buzzes in trade today. And the first stock for the day is Hindustan Zinc. That is in focus on the back of the fact that they have doubled their capacity. Now, Hindustan Zinc's board has approved setting up of a 10 MTPA tailings reprocessing plant as a part of the company's overall 2x growth plan, that is doubling the capacity. And the tailings reprocessing plant has a capex outlay of 3,823 crores. Now, this is one of a kind plant, first in India, that will enable reduction of environmental footprint associated with traditional wet tailings disposal, enhancing the company's overall mineral recovery and ushering in improved sustainability. On the back of this, we have Hindustan Zinc that's up and away. In fact, it has given up all those morning gains, but nonetheless holding out in the green with gains of 0.4%.
Well, interesting development coming in the metal space, and do remember as global conditions improve, the demand for metals might also increase. The prices are stable as well, so this might be a positional bet as well going ahead. But Osho, moving on, from fertilizer space has been buzzing. Fact is the stock, of course, a news flow coming in from China removing the restrictions, but what the technical levels are suggesting for fact?
See, again, on the back of news, we are witnessing a very strong demand or very strong traction in the whole chemical space. fact, on a technical front, has been seeing a kind of a consolidation around the zone of 20 or 50-day exponential moving average. But with today's move, there has been a kind of a notable increase in trading volume. So one can look for buying opportunity in this counter. On the higher end, I am expecting 1030 to 1040 as the first hurdle or first target in the short-term perspective, while the overall outlook remains very bullish. So I expect that any kind of move beyond 1000 can provide very strong momentum in the counter in the coming period. 1040 being the first target or the first resistance, that will be very crucial to watch for whether the momentum will fizzle out or will it continue for a higher zone. So overall, in the short-term perspective, I am expecting approximately 50 to 40 points of upside movement from the current levels.
Well, a very interesting development coming in the fertilizer space. But moving on, another space which is buzzing is this textile space, especially the stocks which are there in the forward integration category of the textile space. And you see stocks such as Vardhman Textile, KPR Mill, Bombay Dyeing moving up in trade. Interesting news flow coming in as sources to ET now say that the center has halted duty on cotton imports till September. Now, do remember that Indian garment industry was facing a lot of issues, especially with the tariff uncertainty coming in the US market as well. And because of that, we saw a strong segmental support coming in from the association and the government for the textile stocks as well. So especially the stocks which are having a full-time integration in the system, or the initial buyers of the cotton, the yarn players, the spinning mills, these are the stocks which are buzzing in the trade today.
Right, and keeping with that, now that the centre has halted duty on cotton imports till September end. Remember, this comes amid India's garment industry that is facing 50% tariff on the US shipments. So we spoke to Group CFO of Raymond, Amit Agarwal, on his take on this subject. Let's go across and listen into what he had to say about it.
The import for us is a very small percentage, but I think what is important is the sign which is being given that the imports which will come will be at zero rated compared to the 11%. I think it's a good positive move. So it reflects that the industry believes that the government is going to come forward and do few things in order to give us some relief, which is a sector which takes a very large chunk of employment. Because today the US customers are practically saying that we should defer the orders for the Q3 from India to Bangladesh or Vietnam. So I think this is a good relief, but unfortunately the challenge is it has come out as a complete surprise. So what will happen is by the time we place an order and the transit time, 30th September could be over. So very small parcels or consignments can really come to us to take the advantage of that. But if it gets extended, obviously it's a very welcome move. Our export is not only to the US, it is spread over Europe, UK, and with the recently signed UK FTA, I think this is again going to help our exports to UK, Europe, Japan. And that way that could be a margin accretive, but this to the US, I don't think so it would be margin accretive. It is only sharing the burden.
Well, important commentary coming from Amit Agarwal of Raymond. He's the group CFO. Now, interestingly, the infra space is buzzing, and we had pointed out earlier this trend at ET now that in a decreasing interest rate scenario and a sovereign upgrade rating, and lots of order flows are also coming in. ITD cementation is in also focus. Our order wins are also being announced. Osho, what are the technical chart levels suggesting now? Will it be a good positional buy?
See, overall on the technical front, it is situated at a very lucrative zone. At current levels, the zone of 780 to 800 has seen a kind of a strong consolidation. And in the recent movement, there has been a strong consolidation, plus followed by positive or favorable technical indicators. So I expect that in the short-term period, there is a strong possibility for the counter to test the zone of 840 to 850 in the short-term perspective, and any breakthrough above 800 is going to provide a very strong trigger on the buying side. So it will be advisable to keep this counter in the watch list. The time it surpasses the zone of 795 to 800 kind of a zone, we can see a decisive upsurge of nearly 5 to 6% on a very short-term perspective, maybe on the positional 1 to 2 trading session. So this is at a very lucrative zone, and one should definitely keep this counter in their watch list.
All right, so that's ITD cementation on the charts. But let's move on to the next counter, and that is Trent that is in focus. Kanishka, take us through what's the news flow on Trent.
Absolutely. So Trent is buzzing after launching its newest youth-focused fashion label, that's Burnt Toast, in Surat. And the company says that it's the first store that offers a high-energy retail experience with trendy and affordable apparel, accessories and beauty products as well. Now, with Burnt Toast, Trent aims to tap into India's booming youth fashion market, blending global style and affordability and strengthening its portfolio alongside Westside, Zudio and Star. Now, analysts have said that the move could further boost Trent's fast-growing presence in the value and youth segments, and that's why this particular stock is in focus today. However, though the news flow is positive, the stock is not reacting all that positively, has given up all its gains and is trading about 0.5% lower as we speak.
Well, interesting development coming in for Trent, but Nestle, yesterday we saw FMCG stocks rallying in the trade as well, as GST rate cut is expected to kick in, and a lot of important elements are there which should be in focus. So fundamentally, of course, Nestle remains strong, but valuations are always a concern for FMCG plays, but this is festive season. So what are the technical charts suggesting for Nestle?
See, again, in the last two trading sessions, as you mentioned, that there has been a kind of a counter trend on the technical front for Nestle. So I expect that in the short-term perspective, there is a high possibility for the counter to retest the zone of 1180 to 1200. And in the short term, again, the 200 day simple moving average, which is hovering around the zone of 1130, 1120, is supposed to provide very strong cushion to any kind of profit booking or kind of a shortcomings in the coming period. But I expect that this counter has high potential to test the zone of 1180, 1200 in the short-term perspective. Overall, there is a positive outlook. The technical parameters have turned from the oversold terrain, so this can be seen as a buying opportunity in Nestle for not very strong, but approximately 50 to 60 points of upside from the current market price.
All right, so that's Nestle on the charts, but another buzzer in trade today on the back of news flow is Reliance. That is, like Sharad had mentioned at the start, is really buoying the sentiment as far as Nifty is concerned. Now, well, Reliance Industries rose almost 2% in today's trade after its Jio Telecom unit announced changes in its prepaid tariffs. Now, the gains were supported by the upbeat brokerage's commentary as well. Reliance Jio has discontinued its entry-level 1 GB per day prepaid pack priced at 209 for 22 days and 249 for 28 days. Following the revision, the effective entry plan now begins at 299 for 1.5 GB per day for 28 days. That's up from 249 earlier. Now, the move aligns Jio's pricing with Bharti Airtel and Vodafone Idea, which already charge 299 for similar 28-day plans. Now, brokerages like IFL said that the 249 pack contributed less than 10% of Jio's mobile revenues, and the 20% hike could directly lift the overall revenue by under 2%. Axis Capital, however, expects the tariff changes to boost Jio's FY26 estimated revenue and average revenue per user, or ARPU, by 4 to 5%. Domestic brokerages reiterated a buy rating on Reliance with the target price of 1,690 rupees. Besides that, we also have another news piece coming in that the FMCG arm of Reliance Consumer Products, Consumer Products has acquired majority stake in a joint venture with the Nutri-Edge Beverages to enter the healthy functional beverage market. So that's the other piece of news coming in on Reliance subsidiary. On the back of that, Reliance is up and away with gains of 2.5%.
Well, yes, Reliance is actually pushing the Nifty up as well. Two important news flows coming in. Also, a good effect coming in the telecom space and telecom ancillary stocks as well. Cement space has been buzzing. Of course, the GST rate cut news flow is also there from 28 to 18%. And interestingly, as per channel checks, the pricing has not gone down, especially because of the monsoon season as well. That means demand strength is also there. And Osho, we have picked up a Heidelberg Cement. Mid-cap space counter for the cement. Yesterday, all the bigger names rallied as well. Could you point out what your views would be, especially on the technical levels?
See, again, Heidelberg Cement has seen a kind of a very strong consolidation in the recent period, having a support zone of around 200, 210 kind of levels on the higher end. 218 to 216 was a very strong resistance zone. But in the last trading session, we have seen a sloping trend line breakout that has been backed by increase in trading volume. So I expect that in the short-term perspective, overall the technical setup looks very promising for immediate upside target of nearly 235 to 240 kind of a zone. So one should look for buying opportunity in the counter. Now the overall range has shifted towards 215 to 235 kind of a levels. So that will be seen as a buying opportunity. Any dip towards 216 can be seen as buying opportunity, and 235 to 40 will be seen as the next potential resistance on the higher end.
An interesting development for Heidelberg Cement, but fertilizer stocks, they are in focus. The stocks have been rallying. RCF, National Fertilizers, Chambal Fertilizers have been rallying in the day's trade as China has removed the restriction for DAP fertilizer. Now, the DAP fertilizer is very important, especially if you look at the raw material for the fertilizer. China roughly contributes 24 to 26% of the total global contribution coming in. Apart from this, also fertilizer stocks, the Q2 numbers are expected to be strong. Sowing season has been really good, and overall there's a bullish sentiment coming in this entire space for the next 1 to 2 quarters as well, and that's why they have been given a strong returns from March lows as well, between 30 to 70% if you remove Chambal fertilizers. Most of the fertilizer stocks have given handsome returns already to the investors. There might be some profit booking in the counters in these days to come.
All right, from the fertilizer pack, moving to the steel pack. Now, the steel prices are still subdued when compared to levels from the last year. That's the word coming in from the Steel Secretary, Sandeep Pondrik. He adds that this trend is expected to stay as India becomes a net exporter. Let's go across and listen into what he had to say.
I will expect that the prices will remain stable, taking into account the demand and supply situation, and also the fact that we have adequate supplies for the domestic demand. So the prices, I don't see any risk of prices going up too much or unreasonably because of the safeguard duty. So exports are holding for now, but with CBAM coming up, there are challenges before the domestic steel industry. Government is conscious, and we are planning to bring a scheme to incentivize domestic steel industry to produce lower carbon steel. That is under planning, and we will focus more on the small scale industry because a lot of export is happening through them.
Well, interesting development coming in. A commentary for the Indian industry as a whole is strong when it comes to Steel Secretary. Also, Osho, moving on, we are keeping our discussion in the metal space. Jindal Stainless, JSL. What are your views for this? Are we looking at a positional up move? But since it's a metal counter and volatility would be there, will it be a really short-term trade or there will be a positional move?
See, overall, I expect that there is a positional move in this counter because in the last 6 trading session, there has been a kind of a stellar or vertical upward movement in this counter. But overall, we have seen a multi-week breakout above the zone of 720. So I expect that now the trading range has shifted towards 720 on the lower end. That should be acting as a buying opportunity for any kind of dip in the future. While on the higher end, I expect a target of nearly 790 to 800. So this is the next immediate trading range for the counter. 720 to 790 is the trading range that we can witness in this counter in the coming period. So any kind of dip or any kind of profit booking, why I'm saying this, because there has been a vertical rally from the zone of 680. So there is a possibility of some kind of profit booking in the short-term perspective. But 720, 730 will be an apt zone to accumulate this counter, while 790 will be the immediate target that one can expect in the short-term perspective.
Right, so that's Jindal Stainless on the charts. But coming to you, Kanishka, you've picked out Emami for us. Tell us, why is Emami in focus?
That's right. So Emami is in focus because it came out with its investor presentation yesterday, and it has highlighted that it continues to extend its core brand across categories. In pain management, in fact, the Zandu range is being expanded with orthopedic oil for arthritis, new formats of fast relief in gel, spray and ointment, and also revamped Mentho Plus Balm portfolio with roll-ons and Total Balm for head to be relieved. These are the products that it is coming out with. Now, in the Navratna range, it is being that's also being broadened with Gold Light oil therapy-based variants and sachet packs of cool talc to drive penetration beyond its stronghold markets. Other than that, in the male grooming segment, Emami has rebranded Fair and Handsome to Smart and Handsome, widening its play from fairness creams to full grooming basket. Now, these new launches in the skincare, hair care and deodorants are also supported by refreshed packaging and celebrity endorsements. So that's the reason why the stock is in focus, trading nearly 2% higher.
Thanks, Kanishka, for the views on Imami. I'd just like to add two more points to it. The first one is importantly that they are going into nutraceuticals, which is a high margin business. And whenever a rural up move happens on FMCG stocks, Imami is the first stock to actually jump up with almost 50 to 60% of revenue coming from the rural segment. Now, moving on, the Nippon Life segment, the stock itself has been a wealth creator on a very long-term basis for the investors. Q1 numbers are also decent and equity market share that rose as well. Osho, what are the views coming in for Nippon Life India?
See again, this counter has seen a very strong traction in the last couple of trading sessions, nearly 6% movement in the current week, but there has been a kind of a breakout in the counter. So I expect that if it sustains above the zone of 840, there is a high possibility for a higher continuation towards 920 to 940 kind of a zone. So overall, there is a very strong breakout, but there again is a possibility of some kind of cool off from the current levels. So I will advise to freshly accumulate the counter around the zone of 830. The first target that I am witnessing or I can forecast on the technical chart is nearly 875 to 880, and any breakthrough above 880 can give a very strong boost for the upside target of nearly 920 to 30 from a very short-term perspective. So this is a very strong chart structure, and one should definitely keep a radar on this counter. Any kind of dip should be asking well for the buy.
All right, with that, it's time for a quick breather. Don't go anywhere after the break. We're getting you more buzzes on the other side. Stay tuned.